A very good evening to you traders. It's Mark here from the day trading room. The time is 10:15 in the evening, London time. That's Sunday evening, 27th of February 2011. What a very busy week we've had last week for all traders. Dow, obviously on Monday we're up around the 12,400 level. Poked under the 12,000 level on Thursday. This is Dow Cash, that is, and then push back on Thursday afternoon and Friday. Oil, obviously very volatile in the headlines. Even if you're not an oil trader, you couldn't have not noticed the headlines for oil. Seem to be quoting the Brent price on the headlines at the moment. They are on the UK anyway. All I see in the headlines are the Brent price rather than the NYMEX West Texas Intermediate, which I trade. But anyway, yeah, massive range, loads of opportunities. Being very careful with the volatility, scaling down the size if necessary. One thing I wanted to say is if you're not using it, an average true range function. I've got that on a 1 minute. I've had it on for a while. It's a great way of measuring the volatility of the market you're trading, especially if you're flicking from Dow to oil or oil to the currencies or even from one stock to another. It's a great way of using an average true range on a 1 minute chart or whatever chart you're trading to appreciate the actual volatility of that instrument, so you can adjust your stops to suit. A worst case scenario stop might be 3 times the average true range on a 1 minute. Sometimes that's absolutely very wide. I mean, at one point on oil we were getting 25 cents move a minute, but normally 10 cents a minute. So then you got a 30 cent, worst case scenario stop. But as I've said in the other videos, it really, the stop is dependent on the setup. But if you've got a worst case scenario, i.e., phone line goes down, computer goes dead, dead stop in the market, then you're always safe. It's all about managing the risk. It always has been, and that is the number one priority we've got. Anyway, onto the trades. I probably won't talk about every single trade. So many, plenty of opportunities. I look for the very best trades. I always have done. In particular, Dow last year, I was doing maybe two to four a day, looking for those best opportunities, looking to maximise them. Now there are more opportunities there. There's more than we could possibly take. So it's a case of focusing really hard for the full day, taking short breaks, coming back, really focusing because the opportunities are there, and it makes sense to capitalise on them for this year. And hopefully we can make this year the best year yet. Okay, oil. Yes, let's talk about these trades. When I've got the arrows that are so close together, it's a tape read scalp. Difficult to run through on the journal, but it's the usual thing really with the tape. Often, if I spot an algorithm, a buyer or seller, and I spot him quickly, I'll front run him and I'll lean on him. So, in other words, if I spot a buyer, say at 98 at 98.23, and I've seen that there's a bit of proof there that he is an algorithm and there's a lot of size there. I'll front run him by going high bid at 98.24 or taking an offer if there is one there, and I'll put a stop just behind him, and then I'll look for a 10 or 20 cent move, from that or to a target. So that's generally when we've got arrows that are so close together like this. And don't let the scale deceive you, by the way. This is a 50 cent increment, so those are still nice 20-30 cent trades. So yeah, this here I can see a little scalp here, probably on the long side after this push up, more than likely, knowing me that I like to trade that sort of thing. Can't quite remember now. Where are we? Back on Wednesday? But yeah, drive up, pull back, I'm looking for the push. Didn't get much out of it by the look of it. It reversed. Good volume. Let's zoom in a bit. Can't see what's going on here. I know it's difficult to see on this, but anyway, good down candle, good volume. There's the first pause. There's my short, and I'm out into the next pulse lower. A classical little pattern that happens daily, and they're great trades. Surprise move lower, the consolidation, and then the secondary move, and you're looking at the tape to see when that selling continues. So that was that setup there. This was sort of a break of this downtrend. The volume just started to pick up, A little bit late in the move, but got on it, looking for a break of that high. Great trade. That's another nice trade in the bank. Again, a larger scale version of this, really. The move up that's broken a high, the consolidation, which is very low volume, the volume lowering. This is a classical setup, actually. Um, for me anyway. I don't know whether it's a textbook thing, but who cares what the textbook says? This is real world trading. You just pick out your own setups and trade them if they work for you. Good drive up, consolidation. It's a bull flag basically. Consolidation. We're above that break point, and then I'm waiting again for the tape. A little bit late on this one. Perhaps the tape wasn't as clear, so I was a little bit late to the party. 97 as well. So we're holding above that. One last dip under that probably was the better entry, but anyway, popped up and we got looks like we got a nice 35 cents out of that. Really out too early on it. Still a weakness of mine. Really fantastic entries, but just hold on, and you're talking 98. It's almost a full dollar move. But anyway, didn't get any of that. Tried to buy this pullback here. Looks like it went against me a bit. Pushing up. The moving average is just pulling up to a little dip under. Long. It looks like I must have just stayed in the trade. There is some support there from the prior move, and then we get a pop up and we get a scale out there. And this is deja vu a bit. I don't know whether this is something similar we've happened on Tuesday. I've talked about, whether I've already spoken about this. But when something doesn't happen that you expect to happen, the opposite is often quite a violent move, which is why when we push lower and we push through the moving average, and the push higher is still on low volume, the volume's actually dwindling as we're starting to push higher, and I exit, I'm actually then looking for the short, and the short came for me on this lower push here. Probably a tape seller helped me with a little bit of an extra entry there, but even if you're not quite on the ball with the tape selling, pushing that for that break there, when you're getting this uptrend and then you're getting that failed push, then there's your short there. So that was the short. Nice little cover there into this flush as we push down, and we actually tagged 97 exactly. More than likely I probably was out in the high teens for most of that. I think actually, if I recall, I was looking for a flush under 97, didn't get it, and by the time I exited, it was up here. But still, great trade. Consolidation, same sort of thing. Consolidation, looking for the push lower, didn't get it and took a small stop on that one, which just happens. How many times have I taken that actual trade, that setup? Once, twice. That's slightly different. Once, twice, 3 times, and then one stop out. Take that every day of the week. Here again, another little small stop out by the look of it. Again, you can afford to have these stop outs because the stop can be pulled up. Most of these trades, the move is actually going in my direction for a short period, allowing you to pull the stop up, sometimes allowing you to take a scale, just generally managing the trade and reducing the risk. Very rarely will it go immediately against you, but if it does, it happens. Take the stop, move on, forget about it. But it's very rare if you're managing risk, tightening stops as the market goes your way. So another small stop out there, and this was just caught in a bit of chop really. The market didn't know whether it was going lower or higher. This is a nice little pattern here. The uptrend line, more of the consolidation here, tightening up, and just seeing the volume coming in. You can see here, good volume coming in, good buying coming in. It's holding near the highs. Let's get rid of all this drawing stuff and actually look at it in terms of what the actual situation. It's holding near highs. That's all we need to know. We've driven up, and on the 3-minute, look, we're just consolidating near highs. So you've just got this pattern. That's all you've got. So the next likely move is for a break. So we're looking for that break. Got on the end of that, scaled out early, scaled out into the good volume move there. It went a little bit more. In fact, it went a lot more later on. But for a short-term trader like me, scalper, fantastic. Where are we? I'm losing my marker point here. Bear with me. So that was a great morning. The the following two trades were bad trades. They were the worst trades of the week for me. Not in terms of monetary loss. Both of those I did take a stop, but because I was pushing for something that was just what I wanted to happen rather than looking at the market. Morning's trades great. Put a lot in the bank with those, even though we took a few little stops. The trades that worked really worked well. Um, but these two were the worst trades. As we pushed up, we were up near at the $100 level. You can see the $100, and we're pushing up. And my theory was, okay, if we break the $100 now after we've come so far from Tuesday's gap up, and actually Monday we had that real rally from the 90 level, and we've come so far. If the 100 breaks, I just expected it to just the offers just completely go, and to make a quick 100 cents out of the trade. That's what I expected out of it, and I had that too much in my mind. I dropped my flexibility a little bit. And so what I was doing with these trades is, as we nudged our head against it here, 99.98 I think, or 95, pull back down. This looked okay still, a little retracement, then another run. That little dip just gave me time to get in. Got in, pushed again, was really looking for it. It didn't happen, and instead of scaling at that last high, which is what I would always do, it's probably a little bit of greed, looking for that flush through the 100, and was hoping for it just to run on, and that was what I was hoping for. So I took a stop there, and then I took another trade here. Again, looking for the same thing, thinking, okay, it's going to go again. It did the same thing. It offered me some on the table. I didn't take it, and ended up taking a stop on that. So two stop losses. I had stuff, money on the table there. I would normally scale it out, but I was looking for that break of 100, expecting it to just flush higher, and to be a real day finisher, if you like. It happens. It took away a reasonable chunk of the morning's profits. Yes. Did it do any serious damage? No, it didn't. Did I learn from it? Yes. Is it probably worthwhile overall? Yes, it is. Moral of that lesson: don't try and get aggressive looking for breaks. I know 100 is a key level on oil, and it's everyone's looking at it. And as an oil trader, you want to be trading the break of 100, don't you? But you don't. Put it all aside. Just trade the setups, and the setup wasn't really there. And okay, fine, I'll probably take it again, but why not scale some at the high, make it risk free? I don't know. Anyway, so that was that. Got a little short here on the pullback. Obviously everyone's looking for the break of 100, didn't get it. When it starts not to get it, you get the rollover. You wait for this little flush, a little deep candle lower on some good volume, the pause, and then we just get that. It just paused before the 99, which is they're quite nice setups actually. When you get the pull lower, there's a support level, you get the consolidation. That's got to be good volume. There's your volume bars. That's got to be good volume down to that, and that was 99 in this case. Just holding, and then you're looking for that break, and you often get a lot more of a run on that. So that was a nice little scalp to make the day a little bit sweeter after those silly trades. Yeah, frustrating. Don't need to go on about those anymore. Day after, what were we? Thursday. Yep, Thursday. Woke up, saw that oil had spiked up to over 103. By the time I turned my screens on, and it was normal regime for me, turn on the computers, turn on the trading screens, and have a look and see what's going on. But don't get involved until the US morning. You can't trade all day on full alerts. It's just not possible. So that's what I normally do. But today, I'm Thursday, spiked up to 103. There was no volume really, relatively speaking, because of the time of day. Even London hadn't opened yet. The London market hadn't opened yet. FTSE hadn't opened. 8 o'clock that opens. So, this was just retail stops. And I saw all this consolidating, and it had consolidating for hours. It tried again, but it was, there's no volume there, and there's no interest in it. And if anything, it's going to drift back down to 100. That's the premise. That's the idea I had. And it also, because often you get this sort of pattern. I'm not really a swing trading type of guy, but I do look out for, I know the sort of way the markets roll. You'll get the 3-day drive, okay, which or 4-day, but some sort of continued move, and then you'll often get a reversal at the midpoint of that final day. So if you're 3 or 4 days into a move, normally three, but it's depending, it's not an exact science. So you're getting the push up, the push up, the push up. Often at the middle point of that day, or at some point in that day, you'll get, if you're going to get a pullback, a deeper pullback in a swing sense, then it will happen at some point in the middle of that day, and it'll almost be like a flush. And in actual fact, that's the sort of premise I had, and it's actually this sort of thing that we had on the Dow. Let me try and get the right screen here. Looking around, trying to find. Here we go. It's the sort of thing we had on the Dow. We had that continued down move, one down, mate, two, three, and then there's the flush, and then there's the reversal. It's a little bit clearer on the actual cash, on the Dow cash, but it's the same sort of thing. We poked under the 12k and then pushed up. Anyway, I'm digressing slightly. The idea, anyway, for the sort of premise I had of this trade was that we were going to pull back and possibly pull back to the gap, which was at that time was at 98.10. So, cut a long story short, took a trade here, and the plan was to hold just small position for whatever target I got. Stop was going to be above 103. No need to have it above that high because I didn't give that any credit. It's going to be around the 103, above the 103, around here. And the rest of the trade stop was going to be probably I think I used 280 Rs on it, something like that. It wasn't so tight, but because it was the volume was low, and it does tend to gap about during that sort of time period because the liquidity's less in the book, so you've got to give a bit more room. And the entry was at 101.35 if I recall, so around at the bottom end of this sort of candle. Took a quick scalp out there as we approached the 101, just sat in front of the 101 on the book, tightened the stop up then, left the swing stop there, tightened the stop up here. I say swing, it's only a day trade, but I'm calling it a swing. Let's bring the 3-minute in so we can see. There it is here. Yeah, and then looked in 15 minutes later, saw it was pushing down, had an order just above a few ticks above the 100. In fact, no, it was 135. It was 135. Yeah, excuse me, it was 135. $100.35 because I wanted the full $100. Why? I don't know. That's the way it is. A mental thing. So yeah, that was a nice little scalp on that. Good start to the day, and I was just going to hold that swing short. Let's push on, and taking far too long to go over these trades. Opened above 100, around the 150. Tape was obvious here. It really was. It was just hammering those bids. Just jump on it. I was looking for a push to 100. We got flush. Went straight through 100, straight through, and came out. Actually it was in the 90s. It came out, but great little start. It pushed so much lower than thought. It was very, very wild. So good start on that. This was just a break of this sort of triangle looking for one more test of 100. I didn't think it would leave it behind without looking at one more go at it. So there's the long, there's the close just before the 100 again, using that as a sort of pivot point, if you like, the 100. Again, pushed above it, couldn't hold, tried. When I see it try and I see it starting to dip low and the volume coming in, there's my short, and I'm just looking for a test of the low. In actual fact, it tagged the 99 and popped up, and yes, I do remember this trade now. Yeah, pushed down. I scaled out half. I was looking for the low 90s or high 80s, so 98, 80 something like that, as my exit. It didn't go. It went to 94, was it, or 95? 96, not enough for me, and popped up. So I closed half, but actually worked out okay because I re-entered on that other half went up to 99.50. Just classic pattern of pushing lower, pulling back, and then I ended up closing that as we pushed. The arrow's not showing there because of the chart thing, but there you go. Ended up closing both of those positions as we broke under the 99. So nice little trade there. Little scalp there. Another little scalp here. Looks like I was looking for the long to push back. That might have been a stop loss actually. Small stop on that. Inventories came out here. Oil inventories pushed it up. Pathetic effort really in the scheme of things. Look at the size of that candle. Even though there was some volume there. Push it back lower immediately. So I'm taking a short on a pop, little pop, and then we got a little push lower, which it was okay. Made a little bit of profit on that one. Couple of scalps here. Constantly looking for this break, but wary from the previous day, not getting too aggressive with it. Did get the break, didn't run as far as I like, but I'll still take that sort of trade. I'll still take that sort of profit any day of the week. Short here at resistance as we'd push back up. Looks like a little crescendo in volume there, probably a little tape guy pushing up and then holding. Take a short, hide behind him, scale out into this low. That looks like two separate trades to me. There's the exit, and then looking. This is the drive up. There's the pullback. Looking for the break of the high. These look good in hindsight, guys. But sometimes you are just in tune with it. It's difficult to describe. If you just. But once you get in tune with the market, if you're in tune with the ebbs and flows, and you just feel where it wants to go, and you combine it with what you're seeing on the tape and the setup and the patterns in the chart, sometimes it all just fits perfectly. And I don't get them right all the time. There's plenty of little stops in there, as you've seen. But when I get them right, I try to maximise the profits. It's one of the things I'm trying to work on running them. And a better trader than me would probably hold that short from there. Okay, I did hold that very very small position from earlier, but a better trader than me would be taking the bigger swings rather than these little scalps. But that's the trader I am. Happy to scalp it. And when you're in tune and you're scalping away, I say scalping, we're still talking 20-30 cents profit because of the volatility, but I suppose it could be classed as scalping because of the nature of it. There's nothing better. There's nothing better when you're fully in tune. And it's something to know that when you've experienced that, and then when you go into that zone again, if you like, to quote Mark Douglas's book, Trading in the Zone, when you're in the zone again, if you like, you do feel the ebbs and flows of the market. You start to really feel the pulses of it, and more importantly, when you're not, you're not, and so there's time to step back, take one or two trades, and just try and get back into it. But when you've got a volatility and you're in tune, there is nothing better. This is with the Gaddafi thing. They said he'd been shot, and I didn't know that at the time. I don't know what was going on, but I just trade the action. Good volume, classic setup here. Great volume, spooked everybody on the the downside. There's your first pullback. There's your entry. Yes, very much. Yes, please. There's a good volume. There's a dwindling volume. Classic, classic, classic. Closing out into this. Closing out half of the position into this flush. This was the trade of the day, actually. Yeah, this was. In fact, it might have even been the trade of the week. It was a really, really great trading day. This for me. Push lower, pull back. There's a classic. Closing half. Hold on to it. I may as well tighten the stop up. Got that as especially with the 98, and we were holding there. Although the range was still quite high, you had to still sit through some choppiness. Push lower, and also that was the 98 was here, but the gap was at 98.10. If I remember rightly, the close from yesterday was at 98.10. So that was lovely little trade. That was when I took the first exit, looking for the further flush. That was my swing exit. So from the short entry here, very very small, nothing to get excited about at all, really not. I not that sort of trader. I struggle to hold it, but sometimes as an opportunity presents itself, I'll take it, and it just makes you feel good just to get a large move rather than sitting there scalping away. But it's very very small position, so really not to get excited about. So that was a swing exit there. I just continued lower. I was surprised actually. I half expected it to to pop up, but it didn't. It didn't pop back over. I thought it would close positive. It didn't. Looks like a little scalp here, probably on the short side. Yeah, I would have thought so. Actually, that was it. Yes, I wanted to talk about this very quickly. I know I've gone on a long time, and if anybody's still watching, thanks for watching the blog. But I normally stop trading at 7:30 here. But then we just had this seller coming in, a residual seller coming in, and he just kept sticking on 23s on the offer. Really bizarrely, I think it was 23s or 25s, and he just kept stepping down. And he stepped down, he pushed it down here, and then it paused, and he stepped on again. And I thought, you know what, I'll have a small size go with this guy. There could be a scalp on this. I'll step in front of him, see if I can get a fill, and I'll hide behind him. Simple as that. That's the premise of the trade. If it had lifted, I'd have taken a small loss on it. But it worked. It happened. It worked. It was okay. Um, I actually, a nice little scalp on this. This was a long for me. I wasn't going to put this on because I don't, yeah, it's not my sort of thing, and there's not really much to talk about. It was a bit of a speculative long again, like the speculative short I did back there, the swing. It was late. I just thought I'd hold it, and I thought I'd close it, at 10 o'clock or something, because we pushed so much lower. And this move was because of that, seller overhang. There was nothing else. There was one guy on the tape. You could see him with his 20s. So we got some up on the short side, and then he lifted, and then it revisited, and then it just started to creep back up. And I just thought, what, 98.10 was, where was the high of the day? 103 and 50. We're down at 90, under 95. It's got to be worth a go. So I took a long. I had a stop under there. It was a double bottom as well. I wouldn't normally trade after hours, but I did, and that actually worked out to be quite a nice little trade. I remember, I think I took it out at the 96.30 or something, or was it 40? I think I looked at later on, and it was this pullback. But anyway, regardless of it, the setup, I can't really say that it was a specific setup. I suppose it was double bottom, but it was more a case of, I've come down so far here, it's got to be worth a nibble on the long side. Is it all over the bull run? So anyway, took that was okay. Small position again, as they always are for swings. Let's run through Fridays. Not a lot to do on Friday. Just almost pleased in a way to have a bit of a range day, to relax a little bit. Very intense trading. Traded a little bit pre-market. As I say, I don't normally do that, but when there's an opportunity and there's volatility in volume, I'll take it. Normal setup for me. Push lower, counter trend, a little bit, higher than you would expect, but then again, it is in the book. Take the short for the push lower, and then exit onto the good volume flush. So great on that. This didn't work out as nice as I'd like, but it was okay. Good volume bars here. Off we go. Pull back, same sort of thing. Pull back. There's my entry, and yes, I ended at that. I remember this now. I took half off for a 5 cent loss because I didn't like it. It pulled back and it went against me a bit. Came up. I took half off because I didn't like it. If you don't like it, reduce your risk. Take off half. Take off 3/4. Take off 9/10, whatever. Reduce the risk. That's fine. You don't have to sit through it. And it did actually pop later on. I did actually get a profit on the second half, which was nice. But I don't mind. If I don't feel right, then reduce the risk. There's nothing worse than thinking, oh, I don't like this, or I'm not so sure about this. Holding it stops you out on a full stop, and you're thinking, what? Listen to what you're saying. Listen to what your self-talk, and how you process the market. Here, not great. Was looking for a break low. I thought we were in sort of a downtrend here. Thought we were just going to try and time this low push. Tape looked great, 97 as well. We tagged it twice. Here we go. Off we go. Take the short. Nah, no runner. Took off half for a nice little profit into this flush, hoping for a nice continued move down to around the 96.50, something like that. That was what I was looking for. Didn't get it. Popped up, closed half at break even. But then again, that's what it's all about, managing risk. And the premise didn't work, but it still turned out to be a profitable trade. I think that was it. Oh yeah, a little short here as we popped over the 98. We've been in the range all day pretty much. Range bound trade. It's important to understand the difference between, and also to spot when the actual phase changes between trend and range bound trade, because your setups change. So you either stand clear or you're looking to fade. So this was where I was sitting here waiting all day for something like this. Popped above the 98. That's a classic. That was a bit slack really. Should have been nailing that top if I'm honest, perfectionist can't be perfectionist in trading. It doesn't work. It really doesn't work. But I would have liked to have got that a bit late on the party there. But I thought it pushed back to here. I thought it pushed back to here. But just late in the day, it was Friday. It'd been a great week. And as we pushed back under and we just started to pause, I just thought, take it all out. Take it all out. It's 15, 20 cents, whatever that was. Take it, bank it, move on. So there's the oil trades for the week. Really can't complain. Plenty of opportunities. Very quickly on the Dow. Nothing on Friday for me. Thursday, gap trade. Back on the old classic gap. Again, based on the overnight ranges. Same old techniques. Push lower to chuck out a few. Then you see the buying coming in. You've got your obvious place for your stop. That's what I always look for. Even if I'm not so keen on the trade, if the stop's in a logical place and the reward is decent, I'll still take it. So there's the long, there's the stop, there's the exit. Straight out all of the gap. I've got time to mess around with scaling on that sort of trade. Here, yeah, a little cheeky one. Not much really, just because there's a resistance you can see. Pushed up, failed, failed, failed. Couldn't push any higher. And by now, actually, there you go. There's a little window of opportunity. Wasn't probably paying attention. Low tick. There's your low in my nice little window. Pop up, great trade. Anyway, didn't take that. But I took a short here. Why did I take a short here? We were close to 12k on the Dow cash, which was here. That was 12,000 on the Dow cash. The fact that we put in a low here, excuse me, we're actually in this sort of range now. I just thought, okay, it's had chance to counter trend rally and it hasn't. What does that tell you? It's bearish. So I took a short, ended up sitting with this for quite a while. It was against me and just hovering around there. Finally, we got the breakdown, which was great, and closed the whole lot out at 12,000 cash. So really pleased with that little one. Tried to counter a trend trade here. This was the 3 minute cycle. It didn't work. I should have really known better, but that's what happens when you're not in tune. I was more in tune with oil. Where are we? This was the Thursday reversal. We tagged under 12k, took out the stops, pushed up to the VWAP. And I like this sort of trade normally. I waited, and you could see the caution I had because I didn't take it as it approached the VWAP, and that would have been the better trade. But I waited. I wanted to see some selling coming in. Selling came in, took the short, looking for a revisit, didn't get it. Got some movement in my direction. Was it greed that didn't take it off too soon? The scale out of it? Maybe should have taken it anyway. It pushed back up and I ended up taking a small stop on that trade. Very quickly, time's running out here. It's pretty self-explanatory, these. This was looking for was it a Tuesday? Yeah, I've already done the video on that lot there, I think. Don't know why my trades aren't marked in for Wednesday. Anyway, nevertheless, plenty of trades there to run over. As I say, good week. Hopefully, have a great week next week, guys. Let's make this really good end to the month. Don't forget it's month end Monday, so caution. Watch out for any shenanigans on the books, on the dome, and in the market. Manage your risk. That's the number one thing. If we do nothing else, we manage the risk, because if we manage the risk, everything else will slot into place. Good trading, guys. I hope you had a great week. I hope you have a great week next week. I've got some really exciting stuff. I don't want to talk too much about it because it's not finalized yet, but keep an eye on the blog. I will put an announcement out on YouTube. I know I've only got 30 odd guys who look at this video, but I've had some great emails from you, and it's fantastic that people are getting something out of these videos. It does it really does please me, because this really is just a journal, as I've said before, and the fact that people are learning from it as well, it's fantastic. So developing that slightly, hopefully something going to create something new, but I don't nothing to announce yet. I'll announce that on YouTube. So for my 30 or so people that watch my videos, have a great week, and I'll be back with the video in the middle of the week, or maybe Monday, Tuesday. Good trading, guys.